What is going on, Alpha Hunters? Hope you guys are doing fantastic this Friday, December the 2nd, our first closing Friday in December. So let's figure out what's kind of going on with the market. We're going to look at a few things. I'm going to try and make this quick because I already have a lot of things I do want to look at and just get an understanding of possibly what's going on. Are we going bullish? Are we going bearish? Was this a fake breakout on Wednesday? We're going to talk about some of that. So let's get into talking about this week. Assess some information, and then get a game plan for what you were probably wanting to see if you were wanting to be bullish or bearish. So Monday morning we gapped down. A lot of this was just left over from Turkey, obviously from Thanksgiving weekend. No, it was just kind of left over. We didn't break above kind of this high that we were just kept smashing our head into around the 402 level. We never really clearly broke out during Thanksgiving week. And we also saw some weak data come out about Thanksgiving week, Black Friday sales and whatnot. So we kind of had a gap down. We got bought up initially, traded lower on Friday, pretty much the whole day. Ended kind of basically at the session lows. And then Tuesday continued that a little bit, just a little rollover, and then chopped sideways pretty much most of the day. Now, Wednesday was the day. We kind of started off much like how we ended Tuesday, just chopping around in this zone. And then we got to the middle part of the day where Fed Chair Jerome Powell was talking at a conference, and he mentioned something along the lines about potentially moderate rate hikes going forward, possibly starting in December. So basically the market kind of took that as, okay, cool, probably a 50 basis point increase in December, and the market just kind of took off. Well, we're going to talk about some interesting dynamics there. Let me just finish recapping what happened the rest of the week. So we kind of just took off. We cleared out that high from the previous 2 weeks around that 402 level, had a little pause there. Looked like we might hit a little resistance, come back down, but we wound up getting through it, and then that was the easy long, right? That was easy, just grind right through it, just keep pushing higher, keep pushing higher, keep pushing higher, all the way into close. So that was kind of interesting to see that kind of price action. So we'll come back and talk about Wednesday here in just a sec. Thursday opened a little bit higher, made a quick run right to 410 on the penny in basically the first 30 minutes, rejected off of that in the next 30 minutes, came back down to the daily lows, and then slowly chopped in a little bit of a bullish manner to finish out the rest of the day. So really, that first hour was the whole move of the day pretty much on Thursday. Friday, then we got employment data that was a little bit better than expected, and the market took that as a bearish signal because, hey, if the Fed's got to raise 75 basis points, well, that's not really what they said on Wednesday, right? So had a nice little gap down, but it was right on top of that resistance that we've had at the 402 level for the past 2 weeks, and it just got bought up. It just got bought up the whole day, and then a nice little retest in the middle part of the day, and then pushed higher towards the end. So that's kind of the way the week went, with Wednesday being the main driver of the price action for the week. So let's talk about Wednesday real quick. Now, what's really interesting is right at around 12:30, we saw immediate buying on the market. Okay, immediate buying. And if I even go into the 5 minute, I'm not going to go down 1 minute because it takes me a while to scroll back. But you see this here, and even if you look at a 1 minute, this first 1 minute right there at that 1:30 Eastern timeline, when you saw the buying coming on the market, I mean, it was buying immediately. So it was very interesting to see that, and it just pushed higher, okay? Until we got to that resistance level in the middle part of the afternoon around that 402 level, and then we had a little bit of a pause, and then it accelerated once it got past that level. You saw a lot more volume kind of come in as we continued to get past it and just kept pushing higher. What's real interesting is it felt very much like a trap. It just felt like a lot of big time Wall Streeters were just pushing the market to where they wanted it to go. They got it through a resistance zone. They flipped the market here around that 402, 403 area. And once they did that, once they were able to push it through, well, all the buyers just had to come in and buy. There was nothing left to really do for them. They got it switched, and then we didn't really do anything for the rest of the week. Typically when you see tremendously bullish days like that, you want to see the next day continue bullish, the next day after that continue bullish. But we didn't really see that. We started to see a little bit more selling come in after that, especially all day Thursday. We didn't really do anything outside of that first 30 minutes. We just kind of chopped around after we got a little bit of a sell down. So it felt very much like a trap because we didn't really see the continuation too much. Okay, we did see a little bit of continuation early Thursday, but that was mostly due to, we opened a little bit higher and you expect a little bit of a continuation, but it wasn't like we ended the day strong. And then on Friday, what was really interesting on Friday was we gapped down, and it was really kind of had to be a nail biting moment if you had switched your positions to be bullish on Wednesday with gapping right on top of that level. I'm going to take a look here at the futures and just kind of show you what I'm talking about, because you can see the 1 minute that data came out about an hour before the market opened on Friday. I mean, the sell button was hit. The sell button was hit. So it was almost like Wall Street tried to trap everybody in the week. It was almost methodical, really. Really trying to get them to sell down and break out that back down to the bearish side, trapping everybody that kind of flipped their positions to the bullish side with that midweek breakout. So it was just kind of interesting to see how some of that played out this week. And, we got to just understand what is now presented in front of us, how we closed out this week, and get the game plan, adjust the game plan kind of going forward. Okay. So just looking here at the daily, these two blue lines, I know they're kind of hard to see because I have a lot of blue on the chart here, but Wednesday's breakout was a pretty bullish day. I'm not going to lie. That was pretty bullish. I didn't want to see the market obviously break out above these levels because I am bearish on the market. But we're going to go through a bullish and bearish case scenario here a little bit later. But I kind of thought we would see selling a good part of the week, probably a midweek pause, and then a continuation towards the end of the week. And really, we saw selling. Monday, Tuesday, we saw selling. Thursday, we saw selling. Friday, we gapped down. Wasn't too strong. The only reason why I probably did see some buying come in was we gapped down right on top of a support that we broke through on Wednesday. Wednesday was pretty much the day where we saw a lot of the buying. And, so these two scenarios I kind of drew out last week where, I think we either go bearish the whole week, or because we didn't break out above the 402 level, or really solidly break out above the 402 level over the previous 2 weeks, we push higher. We try to trap everybody that went bullish getting above that level, and then we come back down. And that one almost played out. Actually, both these scenarios kind of almost played out because we went bearish immediately, and then Wednesday's super bullishness pushed up, was trying to flip the market. It basically did flip the market and almost came back down and got below that. But, Friday's bullishness came in and continued to kind of just push it up throughout the day. So we need to kind of just understand what's going on. Okay, so we're going to look at a few things and then get a game plan going for both sides. Both sides, bullish or bearish. Okay, so this is a chart that kind of looks at the S&P 500, the SPX here in the background. I wanted to compare this to the SPY, but I have too much stuff on my SPY chart, so we're just going to look at the SPX and compare all the different sectors in the S&P 500. So over the course of the whole week, you had the XLC outperforming, the XLF underperforming. Yeah, the financials definitely underperformed a lot, really on Wednesday, Thursday, and Friday. So be careful on financials. I did pick up a bearish position on Goldman Sachs for this next Friday, a week out. So be a little careful there on financials. They were looking a little weak starting on Wednesday. So yeah, watch out for that. XLE was a little bit underperforming. Consumer staples, the XLP was underperforming. The XLU was kind of underperforming for the week. Tech was outperforming, okay? And then consumer discretionary was also on the outperforming side, right? And you see the SPX here was up about 1.6% for the week. So it was just kind of interesting to see the way this unfolded for the week. And you saw tech go from being the worst performer for the week on Tuesday and early Wednesday to being the third best performer for the week, finished strong. So I'm going to now just narrow it down to this, really just this one timeline in Wednesday afternoon. Okay, so I went ahead and focused in really on that rally that we had Wednesday afternoon, pretty much when Jerome Powell kind of came out when he was talking at a conference. Really, you can see obviously the XLC, the XLK, and XLY. So these are the three that are risk on type of sectors that you always want to see leading to the upside if you want to go into a really strong bull market or the economy is doing really good or something like that. But you can see that these three really led pretty strong throughout that rally. The ones that didn't perform well: energies, consumer staples, financials, industrials, healthcare, materials, utilities, all kind of underperforming, at least in those areas. And those are the ones that have been leading a lot since we bottomed in October. So now I'm going to adjust the chart and I'll show you just from basically that high that we put in Thursday morning to the close on Friday. So this is basically the chart adjusted for that timeline of when we hit that peak Thursday morning to the close that we had on Friday. And what you'll kind of notice is consumer staples started to outperform again. So did industrials, healthcare. XLC was up there, and so was the XLY, and the XLK was kind of in the middle of the pack. The utilities were still kind of lagging a bit, and so was real estate and energies. Energies kind of lagged a lot for the week after that Wednesday beating kind of time point. We started to see a little bit more of that defensive play come back in after we hit that high on Thursday morning. So really, the risk on trades worked for about 2 hours out of the whole week, right? The XLC, the XLY, and the XLK. These three: the orange, the yellow, and this light blue. So taking that into consideration, and we're seeing that they didn't have the follow through then the next day or two, on Thursday and Friday, kind of gets you a little bit of a pause, okay? And we're going to take a look. So now let's take a look at some other things like the dollar, rates, VIX, and that kind of stuff. Okay, so here we are looking at the dollar index, the DXY. And what we can see here is obviously Wednesday bearish, Thursday bearish, Friday bearish, and Thursday was a pretty strongly bearish day, breaking below the two lows that we had set in basically in November. So yeah, hugely bearish day there on the dollar. And you would think, as we've kind of seen the DXY or the dollar kind of lose its value here, or lose its luster over the past couple of months, you would think that the SPY, the stock market, the S&P 500 would have been screaming higher on Thursday and Friday. And you know what? It definitely wasn't. Like, we made a little bit of a high Thursday, but we didn't really just absolutely rip it to the upside on Thursday. We didn't really get that super solid follow through. So it was just kind of interesting to see the DXY down that much. And also on Friday, the DXY dropping, and we didn't see the SPY continue to make new highs on the week. So just kind of an interesting note to kind of take a look at that. Taking a look here at the 10-year yield, right on top of that 100 moving average on a daily, right at a previous pivot level. This was a pretty big pivot level back in June. I remember a lot of people saying that this was the top on rates back then. And yeah, we definitely went higher than that for a few more months here recently. So now that we broke out above that level, now we have finally retested into that pivot level that we had back in June. Also corresponding right on top of that 100 moving average. So kind of interesting. You also would have thought that with the 10-year yield breaking down this much, that okay, maybe we will see the market continue to rally with rates providing a little bit ease of pressure. Another thing that was really interesting is we saw the inversion yield between the 2 and 10 get much more inverted, just continued to push lower, got back down to the lows that it had 2 weeks ago, really over Thanksgiving week. This was pretty tough. I didn't really think we would push back down that low, especially today. But yeah, getting back down that low, not looking too good on that inversion yield. I thought we would have been pushing a little bit higher here on the near term, but it was just kind of interesting to see it really push lower on Friday. Taking a look here at the HYG. Now this one is kind of interesting, mostly due to it typically, kind of leads the stock market on whichever direction it's going to go. Definitely has been for a good part of the year. And I mean, look at how flat this is. Like, people want to say this is a bullish run, but this is way more out to the side. This is more like a sideways consolidation. And if it doesn't really start to push back up into the bullish direction a lot stronger, kind of like how it tried to on Wednesday, but it stopped doing it on Thursday and Friday. Now, I don't know if Thursday had a lot more to do with they paid a dividend of 32 cents. So I don't know if a lot of that had to do with why it underperformed so much on Thursday. I'm gonna have to say it probably was, but definitely didn't continue in the bullish direction. So the HYG not really being super strong really over the past 2 months. And then we come to the VIX. The VIX is very interesting. We all know the VIX came down to this 20-point level. It's definitely been an area of interest for the stock market. This is typically when the stock market kind of tops out and starts to roll over. So very interesting to kind of just see how much the VIX just moved down, okay? Now, what's really interesting here is Thursday and Friday on the VIX. Wednesday, we barely made a low, breaking below the Thanksgiving week low, okay? Barely, just a couple pennies. But what's interesting is Thursday, I mean, it continued to drop. And this was even after the stock market kind of topped out for the day and rolled over. And the VIX just kept rolling lower pretty much the whole day. Same thing on Friday. I mean, you can see like the market gapped down pretty good. The VIX gapped up like it should have. It should have gapped up. But the VIX dropped off way faster than the stock market kind of bounced to the bullish direction throughout the trading session. So it was really interesting to see the VIX really get crushed off. And that just kind of lets you know about the psychology in the marketplace. Even though that we pulled back on the stocks over Thursday and Friday, the VIX really saw some what you would perceive as bullish activity on the market really kind of drop off. Okay, so very interesting to kind of see that. And this is one of those things that you want to see as if you're trying to go counter trend. You want to see some divergences like this. I want to say divergences, but things in the marketplace that shouldn't be moving in those directions, in those manners, and the stock's kind of moving in your favor. Okay, this just lets you know a level of complacency kind of going on. You know, just because people aren't being protective doesn't mean it's time to go risk on. So another thing I kind of want to show off is the SPY-G, the SPY-V. This is basically the growth stocks or value stocks in a ratio manner to just kind of see, you know, what the long-term ratio is for growth to value stocks. And the last time we were kind of up at these elevated levels was really the first time that these two ETFs were in the marketplace together, which was back in when the tech bubble was busting, right? It was when the tech bubble was busting. And I wish we had the data to go back to the 90s or at least mid 90s to kind of see what that lead up to the apex was, kind of like how we had here over the previous couple of years. And you just see the tremendous amount of bullishness really push into the growth stocks back in 2020. Now, are we going to fall off kind of like we did back in 2000 and 2001, you know, where we switch from growth stocks to value stocks? Well, you know, I guess we don't have to, but you got to really not like this pattern where we had a tremendous buy up. You kind of have a shoulder, a neckline here, you know, a head and a lower shoulder here. So it's kind of like a hunchback shoulder, I guess. I don't really know what to call that, but you got to really not like how that looks. And even if we just sideways consolidate here for a month or so, it doesn't really look like growth stocks are really trying to come in and push and lead the market back in a bullish direction. So this is another thing that I'd be a little bit concerned about with kind of where we are in the marketplace. So yeah, another thing to kind of watch, SPY-G, SPY-V, or whatever your favorite ETFs are to watch for growth and value. All right, so this is an Excel spreadsheet that I use to kind of track really the past two bear markets, you know, the tech bust, the financial crash, and the current one we're in. And just kind of wanted to see, you know, metrics, kind of timing, the way things kind of played out from peaks to bottoms. And I'm going to say I've actually kind of enjoyed using this. It's kind of helped me just understand like where I could be risk on, where I could be risk off, kind of how long some of these bull and bear runs should last. And what I've kind of noticed in this bear market that we've been in, whether we're making bearish moves or bullish moves, these bullish retracements, right? These are the bullish moves, these bullish retracements. And this is, you know, percent from all-time high, or this is the break below the previous bearish low, okay? So what's been kind of interesting to see is typically in this bear market, whichever direction we've gone, we've overextended typically in every move. So like this bearish move, we were down 14.5%. The first bearish move we had, right? The financial crash, we were down 10.7%. Back in the tech bust, we were down 14.3%. So this bearish move, the first one we had, we overextended to the bearish direction. This bullish retracement, we went up 74%. Same one or comparable timeline in the financial crash, we went up 73 or 72.5%. And then this is the only one that kind of outpaced this 90% bullish retracement that we had back in the tech bust. Was a pretty massive overextension. This move back down on this bearish move, we went down 21.5%. Basically, back in the financial crash, we went down 17.5%. Back in the tech bust, we went down a little bit over 15%. The bullish retracement we had back in the tech bust was 60%. Bullish retracement we had back in the financial crash, 68%. And then we had one of 69.6%, almost 70% retracement. And then that was the top out that we had back in August. And then we rolled over 19%. Then financial crash rolled over 16.8%. And then we rolled over 13% in the tech bust. So it's been really kind of interesting to see how we have we've overshot to the upside and bearish side, to the bull side and bearish side on like every move. And then even on our current move, we're up 74% on our bullish retracement. In the financial crash, we only got 47%. That was it. And then back in the tech crash, we got up 70% roughly in the same period of move. So it's just been kind of interesting to see that, you know, we've overshot to the bear side and bullish side. And, you know, just because we are a little bit extended doesn't mean that this hasn't been the norm for this bear market. The only thing I can say about this bear market that's been normal is the abnormal, right? We've just overshot to the bear side and bullish side almost every time we've made a trending move. It's definitely another thing to just kind of keep in mind that, okay, just because we've gone up this high doesn't mean, one, we haven't gone up that high before on a bullish retracement, and two, we've done it pretty much on every move so far in this bear market. So just kind of keep that in mind. And if you want to take a look at the Qs and kind of what they did for the week, well, they didn't really do much. They got back into the blue box zone, which I was kind of surprised they did. That was really because they outperformed heavily on Wednesday. But Friday, they really lagged. I mean, Friday, they were down 1% for a good part of the day until that afternoon time frame where we ran up pretty good. And I'd say a lot of that was kind of led by Apple. Apple kind of came in and really pushed up pretty strong on the afternoon session. So I've been wanting to talk about Bitcoin. I'm not going to talk about it a lot, but I'm going to mention that 18,500 in this zone where all these bottoms are, I would not be long at that level. Basically anywhere between 18,200 to about 18,600, I would be looking to probably close out any kind of longs that you have. But I'm going to talk more about Bitcoin this next week. I really just kind of wanted to spend a little bit more time analyzing the market this week. Okay, so let's just go ahead and think about all the things that we have, all the information that we kind of have at our fingertips, what we've seen on the market over this past week, really off of Wednesday's bullishness, and then that retest into early Friday, that previous kind of resistance level. Another thing to kind of note, though, is this downward trend line that we've had going on the whole year. Depending upon if you have log scale turned on, you might be at it or you might not. So this is kind of an interesting thing. Like, I typically have log scale turned on, but if you turn it off, you are sitting right on top of it. So I know a lot of people have been calling that out, that we're right on top of it, but I'd like to have log scale turned on. And if we have log scale turned on, we aren't quite there yet. So we do have a little bit of room to kind of play with. You know, which way is correct? I don't know. I don't know. I mostly have it on because whenever I look at long-term stuff, you definitely want to have log scale on, but having it on here, maybe just for this year, maybe it's not relevant, but you know, the market's definitely respecting this 410 level, and we'll see this next week what can kind of happen here. But let's talk about what the bears want to see, okay? Because this is my standpoint on what I would like to see. One, I don't want to see a new high this week. I do not want to see us take out that Thursday high on the market. I would want to see us maybe push a little bit higher Monday, come back down Tuesday, and then continue to kind of come back down Wednesday, Thursday, and then Friday, maybe make a run at least back down to, this 400, 399 type level. Okay. So there's a few levels here that are very important to kind of understand. One is going to be that 200-day moving average. We are currently right at the 403.74 level. Okay. So the fact that we closed over that, I would say, is leaning a little bit more bullish. So for you guys that are bulls out there, that's looking pretty good for you. Getting over the 402 level, definitely also looking pretty good for you. But if the market does not on Monday or Tuesday take out that Thursday high and push higher, I would be a little bit more cautious to the bearish side. Mostly because we retested into that 402, 403 level, and we saw the bounce come in. We saw the bounce come in on Friday. So if we don't get the continuation into early this next week on, December 5th, December 6th, and we don't get back up there and take out that 410 high, I would be looking for the bears to kind of come back in and say, okay, fine. If you're not going to take out that high, then I'm going to say you have run out of momentum and I'm going to start selling. And that's what I would expect the bears to do this next week. Okay. So that's very contingent upon what we see early this next week. If we do not take out that 410 high, and the bears probably come back in and start selling. And if we get back below 400, that's a big time win for the bears. If we get back below the open of November 28th, which was this past week's Monday, well, if we look at a weekly, well, that would be a bearish engulfing candle, or at least maybe like a one black soldier to the bearish side. So it'd be very interesting to see if that kind of plays out. If Friday we get below the open that we had last Monday, which was at the 399 point level. So basically any of these levels that the market can get under, the 200 moving average, the 402 level, the 400 level, 399, all of those are going to be really important. And this is why Wednesday was really, really important for the bulls to push through all of those levels, because now they have all of these levels in their favor. They have the 200, they have that 402 level, they have the 400 level. So yeah, they got a lot of things working for them. They also have the 10 exponential moving average kind of coming up and giving some support somewhere around that 402 level, probably on Monday, Tuesday. So yeah, there's a lot of support there now for the bulls. Okay. But if any time we do not take out that 410 on the SPY and we start to roll over and get through these levels, I wouldn't be looking to be bullish. But what about the bulls? Okay. So this is what I don't want to see if I'm trying to be bearish. Okay. I don't want to see us go and take out the high at 410, maybe make a run to 412, have a quick retest into 410, and then continue to push higher, possibly earlier this next week, maybe make a run up to the 417 type level or something like that. That is a situation you don't want to see, just because, that's a continuation in the bullish direction. You don't want to see that. You don't want to see a continuation in the bullish direction. So which one of these is kind of going to happen? Well, taking into account what we saw in the VIX getting just making massive breakdowns, right? Thursday and Friday, and the market not really continuing that hardcore into the bullish direction. Like you would have thought, for how much the VIX would have dropped on Thursday and Friday, that the market would have continued higher, maybe making a way up into the 413, 414 type area. So that was very interesting to see that kind of coming out of the marketplace. Same thing with the dollar and rates. Both the dollar and rates continued to push down, and the market didn't really. After that huge gap down that we had on Friday, a market was, it was bullish. Like we saw buying pressure come in on Friday, but that gap down definitely says there's possibility for an opportunity in the bearish direction. Maybe we finally cleared out all of the potential trade orders that were sitting right here. Maybe just trapping people, even on a weekly closing at this level. If it doesn't hold by next Friday, then it was just a fake out. And look at how much volume came in on Wednesday. So getting through all of these levels was just one of those things that the bulls feel like they finally got a sense of relief and that kind of thing. Okay. So I'm going to go back to '01 and I want to show you a quick chart pattern. Okay. So this is looking in 2001. Basically, that bottom that we had in March and then the run up that we had into May lasted roughly 2 months, almost to the day. Pretty much to the day. Yeah, the 22nd of March to the 22nd of May. What's really interesting here is we had a very nice consolidation here for a couple weeks in the beginning of May. And then we had a very strong move up, cleared out a lot of orders, it had an increase in volume. So, is that identical to what we're seeing now? It's not identical, but is it similar? Possibly, right? We had a little bit of a consolidation. We had some higher lows kind of come in, except for this little gap down. But it was immediately bought up back here on May the 4th of 2001. So a little bit of a higher lows kind of coming in. Obviously had a clear resistance around that 127 level back then. And we just had a very strong push up through that level, continued for a couple days. And it then slowly just kind of took over back to the bearish side. And this is what you want to see if you're a bear. You want little wins. You don't want major wins. You don't want snapbacks like we got Friday morning. You don't want to see snapbacks on the bearish side. You want to see little wins. Just slowly kind of grind it lower, get back below some of these levels. Nothing extreme. You want to break this trend line that we've had going here over the past month and a half and just get back down into these 390 to 400 levels and just chop around in here until we get to the end of the year. Definitely just change the trend of the market. You don't want anything crazy. You don't want to have massive snapbacks because they probably just going to be bought up. Especially if they're on light volume. So for bears, you want little wins. For bulls, you just want to continue to grind to the positive side. You want to continue to grind to the positive side, and then probably sometime in the future you're going to have a pullback. Right now, it probably looks like into the 400, 390 level, but right now you want to continue to put the pressure on the bulls, continue to make them close their positions, just continue to make highs as you have broken through this 402 level that had been a major resistance for you over the previous couple weeks. So which way is going to kind of win out? I have no takes right now. I got no takes. The one thing I will say, if you're looking to possibly pick up any bearish positions, I would say the line in the sand would be under Wednesday's candle right there, that low, which I think the low of the week was Tuesday's candle. So the low of 393.30, that would be a really good line in the sand type spot. If we break below that, I mean, that undertakes this massive bullish volume that we got that came in on Wednesday. Yeah, there's a lot that kind of is going to go on here over the next week. And then 2 weeks out, we got, CPI data for November and the last rate hike decision from the FOMC on that Wednesday. We'll talk a little bit more about that next Friday, but I wouldn't be trying to do anything heroic here. I don't think it's going to be super snappy in one direction or the other. You're just looking for little wins, whether that's to the bullish side or bearish side. And for the bears, it's going to be a little rough. You're going to come down, you're going to hit some resistances, you're going to get some bounces, you're going to get some rollovers, or at least that's what you're wanting to see. You want to see some rollovers after hitting a support spot. So that's typically what you're going to want to see. Nothing major. You just want to see us slowly grind back through a lot of these support levels. So Alpha Hunters, whether you're bullish or bearish, you guys have a great weekend. Alrighty, take care, Alpha Hunters.